What's it looking like for 2024 for commodities? I know we had a choppy week last week. There's politics. I mean, it feels like everything could go okay or everything could go terribly wrong this year.
Right. Well, it went terribly wrong last year. Actually, maybe that's a good place to start, is talk about really what happened last year, because I think it's teeing it up for a reversal of some of those pressures. And the setup we have going into 2024 is classic end of cycle, which is stating you always want to own commodities. Inventories are low. Number one, spare capacity outside of oil is exhausted, and most of that spare capacity in oil resides in Saudi Arabia and UAE, and demand is at record levels. So you put those three facts together, the fundamentals are not that bad. People talk about an oil glut and everything, and you're pointing out Saudi's weaker pricing, but the reality is you're still sitting at $75 a barrel. Right. And the return on capital employed at these price levels is somewhere around 20%. So that's the setup going in. And then I think one is on China. China, you can't deflate and delever at the same time. It's impossible because you're fighting yourself doing that. So they have to begin to reflate, because a lot of the disinflation being exported around the world is coming out of China. And then the third point is, with the immaculate disinflation, what you have is a likelihood that central banks around the West are going to cut rates. You do that, you're teeing yourself up for a fantastic 2024.
So what you're telling me is that there's definitely a bullish case, right?
Yeah,
for oil in 2024. Well, but no one's really seeing it because everyone's just so gloomy about
I think they've been beaten up so bad over the last year trading these things that their willingness to take a strong view, either bullish or bearish, is just not there. Consensus view is a trading range from 60 to 90.
But again, I mean, and what people missed last year was the outperformance of U.S. shale production. Could that happen this year again?
But why is everybody focusing on 300,000 barrels per day?
Because we missed it.
You missed it, but you missed 800,000 barrels per day out of Iran, 150,000 barrels per day out of Venezuela, 2 million barrels per day out of Russia. Okay. And you're worried about 300,000 barrels a day. That's why I was gone for that 6 months while this obsession with U.S. shale was out there. But
you know why?
Huge.
Let me tell
Venezuela in Iran.
I know, but you feel like it's further afield, so it's more difficult to look at the numbers. I mean, U.S. shale production is right there. I mean, you should be able to analyze it, right?
Yeah.
With more consistency.
Actually, if you look at where the big miss was, it was in the Gulf of Mexico. It wasn't shale. Right. And what it was the Europeans quit spending on renewables in green investments and redirected that capex into the Gulf of Mexico. That's a one-off. But when if you look at Goldman's numbers, they missed it by about 400,000 barrels per day. 200 of it was Gulf of Mexico, 100 Permian, 100 Bakken. The Bakken can't be repeated. Gulf of Mexico can't be repeated. The only one that could be repeated is the Permian, but you're fighting against decline rates. But I'm going to go back. You're caught. You're caught in the forest, or the trees, and you're not looking at the broader picture. The broader picture is Venezuela, Iran, and Russia, and this immaculate disinflation that everybody's talking about. There's 3 points I want to emphasize about it. One, it was global synchronized disinflation. 2, it occurred against the backdrop of record commodity demand. 3, it occurred against a backdrop of a very strong U.S. and a relatively good China, good global growth. Therefore, it cannot be demand-driven. It was supply-driven. And can monetary policy or fiscal policy create supply in 1 year's time? No. The only thing that can do that is regulatory easing. And where did they regulatory ease? Sanctions on Venezuela, Iran, and Russia. 2, environmental policy. And then 3 is on immigration policy. So you got more energy, more food, more labor, and that created this immaculate disinflation. Are any of those things repeatable next year? No.
Okay, OPEC also had a difficult year because of Angola leaving, right? Can Saudi actually keep it together, keep the group together?
Everybody's focused on Angola. Are we ever going to drill for deep water offshore like that ever again? No. I mean, you're not going to put $20 billion into a 30-year deep water offshore platform that's going to be producing oil, well beyond 2050. The answer is no. Right. The only three places that are going to produce oil in the future are United States, fast cycle shale production, Middle East, and Russia. Yep. And so you have Saudi Arabia, UAE, and Russia together, which are the rest of this. They're fringe players.
Okay, I like that, fringe players. Yeah. Do you think the UAE and Russia will continue going along with what Saudi Arabia want?
Yeah, because it's in their interest. It's in both parties' interests. What I like to say is Saudi Arabia manages the market to the downside when it's going down. Russia only manages the market to the upside when it's going up. So you got to be a little, in fact, that's another important point about, let's go back to what was a big miss. It was sanctions. I mean, Russia was exporting the highest level in the last week of December of last year, which tells you just everybody's turning a blind eye to it.
What does it? So this year, what kind of economy? And we also got everything wrong on the U.S. economy, right? Yep. There was no landing, then there was a hard landing, then there was a soft landing.
Well, I have to say Jan Hatzius got it right. So my colleagues at Goldman got it right.
He did.
We got it wrong on all the market side, though.
But so what does that mean for 2024? Is there going to be introspection on trying to call what the markets do in general? Or are you confident that the economy kind of glides?
I think everybody got beat up so bad last year, they're unwilling to take a strong view. Okay. And I think that the setup for all these markets is better than what it was last year. I mean, you even take consensus GDP growth, they're just a slight bit lower than what they were last year, but they missed last year. So that means it's a pretty big bump up in expectations on growth. Because again, you have your immaculate disinflation that's going to allow central banks to ease. And by the way, that's just classic. We went through the mid-cycle pause. We're going into the second half of the business cycle. This is just classic.
But nothing's happened.
Commodities.
I know, but nothing's happened to the labor market, so there's nothing classic about that. So you don't really know where that ends up.
Well, let's go back to one of my 3 points where, one of the issues that really aided the labor markets was immigration. Immigration in Canada, UK, and Germany was 2x. Now, I want to be careful. There were Ukrainian immigrants, and I think that's really important. But what it says, you got a one-off increase in labor supply that dampened the wages, that allowed this immaculate disinflation to occur. By the way, Goldman did a great piece on that if people are interested. And I think that the key point here is what that did just gave everything longer run room. So it got more. Actually, the other thing I want to go into about that can reverse in 2024. We didn't talk about the environmental policy. The other immaculate disinflation. They turned a blind eye on coal use, blind eye on oil use. Coal in Indonesia, India, and China, all-time high. A lot of that disinflation coming out of China, burning coal. Deforestation for more soy, cutting down the mangroves in Philippines for palm oil. I like to point out, people were unwilling to pay for their politics. And, and now with disinflation, inflation coming back, everybody's going to be green again.
Jeff, I remember this epic interview you gave me maybe 18 months ago where you say, we're running out of everything, and this is a massive problem with commodities worldwide. Have we redressed that with investment?
No.
So it's just getting worse?
We gave the world extra supply since you and I did that interview. You got the SPR, then you had Venezuela, then you had Iran, then you had Russia. You've got all this extra supply. You had more agriculture put into the market, again, turning a blind eye to environmental policy. But metals, I wear my copper bracelet here. The copper story, the metal story, aluminum, it is as tight as it was in 2022, 2021 when we did that interview. Actually, if you ask me what is my favorite commodity out there, it's copper.
Wait, what's the copper bracelet for? Is it good vibes or just reminding yourself of the copper market?
Yeah. No, but copper it's got really low inventories, exhausted spare capacity. You had the Panama issue. Anglo-American reported misses on their numbers. And demand, even in China, was up 10% year over year. So it's a really positive story.
We talked about the energy transition. I don't know whether you think that COP28 was a success.
Oh, I think it was an absolute smashing success because it brought the dialogue to a global basis and down into the oil companies in the rest of the world. So, and recognition that LNG is a transition fuel. So, in terms of making progress with the challenges that the energy transition has faced with its audience, I think it's done a tremendous job.
But so, what comes next? Again, we're talking about real money now being invested, and I don't know whether it's renewables. We also have companies like Shell that basically have turned around their strategy and saying, sure, renewables is nice, but we need to focus on our core. So does it delay the transition, or are you doing both things at the same time?
Let's go over, again, remember I talked about the immaculate disinflation. Yes. By the way, our three big tenets of being long commodities back in 2020 for the super cycle were R, redistributional policies, E, environmental policies, and D, deglobalization policies. RED, redlining commodity demand. All of those were reversed. And let's focus on the E, environmental policy. How was it reversed? You take here in the UK, drilling for oil in the North Sea, delaying gas boilers and a bunch of different. In fact, you had Chris Skidmore, the Tory MP, he announced his resignation last week in protest for that flip-flop on policy. Notice the timing that he did his resignation when inflation was back down to normal levels. And I go, everybody's going to be green again with inflation numbers back down to the low levels. I think I say, what did we underestimate? Or we overestimated the willingness of politicians to pay for their politics. And we thought that those three things we outlined were going to stay stable as we went into there. And what we found out is prices go up, people pull back. Then as inflation comes back down, I think you're going to see everybody move back into having a green policy again. I think that's going to be the way the energy transition occurs. They go one way, this way. And also, let's go back to Shell. You have to own a portfolio of the green and the brown. Maybe it's not. I don't think Shell doing it inside of its of a corporate structure related, but a portfolio needs to own both. By the way, you cannot control emissions unless you own the emissions inside the portfolio. And owning the green acts as a hedge to higher interest or to low interest rates and low oil prices. When oil prices are high, interest rates are high, the green goes down.
I know, but 2024, I think 60% or 60% of world GDP goes to vote, right?
Yep.
And it's unclear whether it's going to be more far right, policies that are maybe less friendly to climate change policies. So does it swing, or is there still big business that no matter what happens, this transition will happen with this kind of swinging to the right or to the left?
Let's go over. I'm not an expert in politics, so we're getting out of where
2024. No one is.
Yeah. But let's just take the obvious one, which would be Trump in what you're proposing here.
Yeah.
I don't think it's clear that he's going to back off on the green policies. Why would he let China dominate the EVs, dominate solar? Why not just pump money into IRA, green, brown, pump it into everything out there? And I have a feeling, so policy similar, it would be like the UK policy, but pump more into green.
Right. So it's an economic policy that will happen no matter what. So this is not. It's going to be less dogmatic.
Yeah, I think it's going to be. It goes back to these deglobalization. Turn your country into an economic powerhouse on its own.
So as an investment, how do you play that?
Well, I think owning the commodities right out will be difficult, but you'll want to be long volatility. And because if you put more green into the mix, as we've seen in Europe, it creates a lot of volatility. Because remember, renewables, they have a intermittency problem. The reliability is not there. So you end up with massive amounts of volatility in the commodity markets. I think that's going to be one of the implications. But you want to own both the green and the brown. I got to go back. The green hedges the brown, and the brown hedges the green through the interest rate channel. And I think that when we think about those opportunities, by the way, if you have, let's say Trump did come in and spend a lot of money on everything, brown, green, and everything like that, you want to own the suppliers to those type of companies.
Jeff, what are you doing next?
Still to be determined right now, but it'll definitely be something along the lines of energy transition.
Okay, so you'll have to come on air more
Great.
often.
Thank you.
Thank you so much.
Pleasure.
Jeff Currie, there, former head of commodities research at Goldman Sachs, also chair of the advisory board at the University of Chicago Energy Policy Institute.